What's going on, guys? My name is Ryan Spath. I'm a local real estate agent for Keller Williams here in Boise, Idaho. And I just wanted to talk about a great strategy that is house hacking with a FHA loan. And I personally think that this is one of the best strategies to get started in real estate investing and just securing a residence for yourself. And it helps you offset the cost of your mortgage with minimal out of pocket. So right now in Boise, we have 18 duplexes for sale that are ranging anywhere from $539,000 all the way up to $1.3 million. In our market as a whole, it's not as strong as it was, meaning that properties are sitting on the market a little bit longer than they were even just a handful of years ago. I don't know if any of you guys were in the market or buying properties 4 or 5 years ago. You would write an offer and someone would likely write an offer that was greater than yours. Oftentimes it was cash, super competitive. You were getting no concessions, you're getting no help. Oftentimes you're having to buy the properties as is. The sellers weren't willing to fix everything. And the market has kind of shifted. Properties are sitting a little bit longer than they were. Right now in Ada County as a whole, we have 2.6 months worth of inventory. That simply means that if no more houses came on the market today, we would sell out of houses in 2.6 months. They say that it's a balanced market the closer we get to 6 months. However, here locally, I'm personally seeing that sellers are more likely to work with my clients in a sense of they're either A, coming down on the price, or B, they're offering some type of concession, or C, sometimes even both. So why is this important as a house hacker, as a first-time buyer? So if you are using an FHA loan, you can get up to 6% concessions to help you with buying the rate down and paying for your closing costs, which if you're getting your closing costs paid for, that means you as the buyer come out of your pocket less to acquire a piece of real estate. And if you can use some of these concessions to buy your rate down, your monthly mortgage payment is also going to be lower. So I wanted to just kind of talk through an example here in the local market, and I just randomly picked 203 Rudy Street. It's a duplex. It's on the Boise Bench. For those of you that may not be familiar with the Boise Bench, it's just a great central location to Boise. It's above BSU. You can get to the college in less than 15 minutes. You're right near Ann Morrison Park, which is a super popular park. The Boise Greenbelt is nearby, the Boise River. You're close to the airport. You can get to the interstate fast. There's tons of local coffee shops. It's just a great place, and it's very popular. So with this property at 203 Rudy, it's been on the market for, looks like, let's see here, I don't want to misquote anything, 202 days. So it's safe to say that if the market in general is, the average days on market is 36, and this property has been on the market for over 200, obviously the buyers are telling us that they feel that this property is overpriced. Sometimes there can be a disconnect between what the seller thinks the property is worth and what the market is telling us the property is worth, i.e. they're not getting any offers. So in this particular case, let's just assume that we were going to offer the full $550K, and in doing so, we wanted 6% concessions, the full amount you can get for an FHA loan. So what that 6% would do, it would give us 6% of $550K is 33 grand. So that's going to allow us to buy this $500,000 property with only our down payment, only the 3.5%. which would be $19,250. And we would use the remaining of that money to buy the rate down. We're just going to assume that we're going to be able to buy it down to 575. You're going to want to talk to a lender and get the exacts on this one. It's going to be based on your credit and a couple other things. If you do need a connection to a lender, I have a great one that I've personally built a relationship with and I've used for my personal deals for over the last 10 years. Great guy, unlimited mortgage. So back on this example, we purchased the property for $550K. We can figure out that the taxes are $3,851.92. You can just look on the county appraiser site and pull the tax records. And then I know just from helping clients in the area, the insurance is going to be around $900. You're going to want to get in touch with your insurance agent and get an exact quote so you can underwrite this properly. And then it tells us in the MLS that one side, the tenant is actually paying $1,525. So we're going to assume for this example that we're going to live in one side and we're going to continue to rent one of the occupied sides where the tenant is paying the $1,525. So with that $550 purchase price at a rate of 5.75, the taxes at $3,851 and the insurance at $900, we're going to have a monthly mortgage payment of right around $3,578. When we back out that $1,525 that we're collecting in rent from the other side, that's going to make our monthly mortgage cost a little bit over $2,000, which is actually a pretty sweet deal. If you're familiar with this market, you know that the average rent is right around that for a 3-bedroom property. Granted, this is a 2-bedroom, 1-bath, so it's a little bit smaller. However, you would be owning this. This is an asset that you would be owning, and now you're in the market and it's going to appreciate over time. Not only that, but your tenant and yourself are going to pay this mortgage down and you're going to owe less over time. So the value is going to go up and the amount that you owe is going to go down. So you're going to be building positive equity in a great duplex in a great part of town. So one of the things that I'm often asked with this is, what are the ahas? What are the risks of this, Ryan? And there's a few that kind of come to mind, right? The first being, if you only have $20,000 to your name, this is not the right move for you. Here's why. If the air conditioner goes out this summer, if the water heater springs a leak, if the refrigerator stops working, all these things that cost thousands of dollars, you as the property owner are going to be on the hook for. So you want to make sure that you do have money in reserves. If that's something that you want to discuss further, you can reach out to me and I'll give you my contact information at the end of this video. Another thing is that in working with clients, they are unsure how to collect rent. I've been an investor for over 10 years. I personally manage my wife and I's real estate portfolio. We have properties here locally in Idaho and further away in Florida. I have awesome systems. It's not as hard as you think, guys. The hardest part is screening. You want to make sure you screen and you get the proper tenants in place. And after that, it's fairly easy. I have connections to attorneys. If you want to use them to draft you a lease, I can give you a lease. However, I am not an attorney. This would just be for your own viewing, and you could take it and use it as a reference as you create your own. One of the other things is rent collection. I personally use Schedule My Rent. It's a very basic rent collection tool. Costs $2 a month per property, but it's something that's online, so your tenant can create a login, they pay the portal, and then the portal pays you wherever you direct the funds to. Another one that I've recently switched over to is Rent Ready. This is promoted on Bigger Pockets, and if you haven't been onto Bigger Pockets, I highly suggest that you get on biggerpockets.com and create a profile and just network with other investors and start doing your own due diligence. The best thing you can do as a new investor, a new house hacker, is just educate yourself, right? Know what you're looking for and just speed up your learning curve. So beyond those couple things, One of the last things that people discuss is, what about evictions? You know, what happens if the person does not pay? Which, very scary. It's happened to my wife and I one time in 10 years. It's a pretty straightforward process. It's outlined in your lease as to what's going to happen. High level, you post a notice of pay or quit. If they do not pay, you have a hearing. You hire an attorney and an eviction attorney. They would have a hearing at the courthouse, and then the judge would kind of navigate you through that and tell the tenant that they have to pay or get out, pretty much is the basis of it. But again, this can happen. It does happen. It's just, it comes down to your screening. If you screen the right tenants and you have the right criteria, the likelihood of this happening is lower and lower. So if this is something that you did want to explore further and you are interested in this, and this does speak to you, because the idea of buying a $500,000 asset and only coming out of your pocket about $20,000, and then when you're able to rent out one side of the duplex and live in the other, and your all-in costs are a little bit over $2,000 a month, it makes the idea of homeownership a lot more attainable. When I bought my first house 12 years ago, I was under the impression you had to save up 10, 20% down. I didn't even know what a house hack was. I thought you just, you save up 10, 20% down, you go to the bank, you write a check, you move in and you live in a house, and that's what you do. And that is kind of an old way of thinking, especially if you're not fortunate enough to make, 100, 200 grand and you can't save up the $80,000 to $100,000 to buy a house. This house hacking is a great way to not only build wealth, but it also gives you a taste of being a landlord, and you're going to effectively, you're a real estate investor now. If you can muster the courage to go this route that not everyone's willing to do, and you can do this even a couple times, your trajectory for your net worth is going to be light years ahead of your peers. If this is something that you found value of and you'd like to connect, and I can help you, whether it be connect you to a lender here in the Treasure Valley, the Boise market, please shoot me a text or a call. My phone number is 208-600-2814. I love helping people. I have sheets where I analyze deals and we plug in the numbers, and I can show you and teach you how to pull rent comps and just do what's best for you. So again, if this is something that you found value and you want to connect, please just give me a call, shoot me a text. My phone number is 208-600-2814. Thanks for watching.